Hello everyone, welcome to a trader's journey. My name is Leslie Pips. Thank you for joining me today. Today I'm just going to do a quick rundown of market structure, right? Of how I determine buys, how I see the market, and hopefully you learn something from that. So I'm just going to run you through how do you say the market structure is the most important thing in trading, and then comes your psychology. One of the most important things, let me just put it, one of the most important things in trading, because once you can learn market structure and master it, you already 95% there in terms of your trading, because market structure is very, very important, because this is where your bias is determined. And I always say that have a holistic view of the market. Have a top-down view, and don't basically use the lower time frames as your way you do your analysis. Right, do your analysis on the higher time frames so that you're only executing on the lower time frames, because of a lot of the times lower time frames there's a lot of noise and you get confused on where the original value area is. So on the higher time frames you can determine where your value area is, and then you can make your trade ideas based on the value area and the market structure. So have a very broad view of the market, and don't have a myopic view and just only focus on the lower time frame. So let's have a look at the market structure and you see exactly what I'm talking about, right? So here we have a weekly of the euro dollar. So I'm just gonna do a quick rundown of how I determine my entry and my trading buys. So I just want to show you what I'm talking about. So when I look at the market, I trade in zones. What I mean by that, I have my zones where I trade, where there's usually I use a zone of internal and external structure, and then I trade within that structure until the high and the low of that structure is broken. So what I mean about that is, if you have a holistic view of the market, so if I go on the current view, so I'll have like a weekly high. This is a high, clearly you see the high, and this is a high that broke structure over here, right? We broke structure. This is the high that broke structure, right? Structure break. So this is a strong high. We created a low, took out these lows over here. We broke structure. It's a obviously you can see it's a strong high because it took out all this liquidity, all these lows over here. So we created a low. So this is the weekly low, right? So now I have my zone, right? So I'm only trading within these zones until this high, or this low is broken, right? So this becomes my internal structure, and I will base my trades based on that. So once we have a break of structure on these areas, what happens all the time after a break of structure is the market pulls back, right? Sometimes it pulls back to the last low pre-break, right? Sometimes there's a gap in between the two lows right here. It'll pull back into that gap. If you can see, if I zoom in here, what happened after we broke this area or broke this structure, we closed below here, we had a pullback, retested this area, moved down again, right? That's what I'm saying. Also, we break structure, we pull back and move down. So this is quite a significant area because price rejected it a few times. So we still in our internal structure. This is my external. This is here. This is my external structure. This is my internal structure. So every time there's a break of structure, expect price to retest or pull back slightly before the move continues, because the thing that you have to look out for is the further price goes, right? The further the structure goes, the less likely that it pulls back into a value area. Usually price will break structure and immediately pull back into value areas to collect more orders so the market can move. But the further it runs, like this is the run here, there's no way price is going to pull back all the way here and then move down again, right? It's quite a big run. Most of the time price will take out these highs, right? So that's how I look at it. That's my weekly. So on my weekly, I'll have these zones here: the low, the high, and then these last lows pre-break. These are depending on, doesn't matter what you trade. ICT call these breaker blocks. Other people call them last lows, pre-break, whatever it is. But just know that these are levels that are very important in the market. When there's a structure break, these levels should hold the market most of the time. So now that I have my weekly zone, I have these levels here that I can focus on. I can go on my daily, and on my daily, what do I see? Obviously, this is the weekly structure, and then I can go a little bit deeper into it, right? So if you see this zone here, obviously we broke it, retested it, and then continued down, and then our price started to pull back. If I have to draw my fib into this run over here, I usually look for the 0.25 to be broken to determine that my pullback is valid, and usually it'll pull back into the 0.5 area of the fib. But then, because it's a unique market structure, we've had this massive run here, which is unprecedented for the euro. So usually it'll move slower if it's a pullback, right? But then this is a market structure shift because it's breaking all the levels. But we're still within our internal structure until this high is broken. So how do I frame my trades based on this, right? So on the weekly, we are in a weekly thing, our weekly zone, and I'll start looking deeper into the lower time frame. So I'll look at this as my daily high, right? Let me just move this over here, right? And I'll put a line here as my daily high to not be broken. Let me just change the color. Let's make it yellow. It's my daily high, right? And this is my daily break of structure. See, we broke structure again here, right? Then create this sort of block. What did I say? After a structure break, slight pullback, right? And what you see here is this is the pullback, this is the last low pre-break, and then there's another low over here. So the price creates these gaps most of the time. When it fills this gaps, because why does it fill this gap in between this low and this low? Because of there is an area of value over here, you know. It's a value area. These are order blocks, came in, tapped into these order blocks, and moved on. There's a whole other thing about order blocks which I'll do in the next videos, but I just want to show you market structure. Break of structure, pullback, create another value area, another push. So this is the new value area, another push down. So now now that the price is exhausted, I mean, we've been moving all the way down from this area. This is a big move. Now price creates, before the market shifts, right? If there's an exhaustion in the market, right, the price, what happens is we will have a big move like this, and then there's a pause in the move, right? If the momentum is going to continue, price will continue to move. But then if the momentum's done, you will get a pause in the market. You will get market structure like this, where price is consolidating for a very long time, and you'll start to see us breaking structure, going in different direction, going the other direction, right? So I always say that if you can't catch the first run, the second run is most important, because that's what determines the structure, the trend, right? So when we created this consolidating area and we broke structure here, right? We broke structure here. If you can see here, price never really pulled back. It pulled back slightly with these two order blocks and then created another run, but we never pull back all the way up here. Why? Because it's too far for price to pull back to, because of it's a big run, right? And then what do you look for? You look for these structures to hold price. Anything that closes below the structure, you can sell from here. That's how I determine my buys. So when I see areas like this, I'll start looking for market structure breaks on the lower time frames. So when price starts to pause like this, I'll go on the 4 hour, and then that's where I'll frame my value areas, right? If you can see price paused a bit, let me clean this up, and we start to see structure breaks going a different direction. See another structure break here, and we had another one here, and then this is what created this. If you can see here, we're not breaking the lows, we're just breaking the highs. This is the lowest low that was created, and then this low failed to break this one, created another lower highs, and then took out liquidity here, right? But then this is still a strong low. These are the lows that have been broken, and then took out liquidity, and then we started to shoot up, breaking structure. So you wait for levels like these to be broken. For me, I usually wait for the 0 to 5 on the fib, as I showed you before, to show me where price is trying to go. So that's how I determine my model, my bias, right? Areas like this, I look at the 4-hour chart. If I zoom into these areas, break your structure, mini pullback here. This is where I'm gonna look for my entries on the lower time frames. So when I see an area like this after a break of structure, and then when you see price creating a small little channel here with like very small candles, it's creating a squeeze, right? That means the momentum is very bearish after a break of structure. Remember, when the price breaks structure, a lot of people have take profits here, so there's a lot of liquidity going out of the market. That's why most of the time you'll see, if it's not a big run, you'll see price pulling back into the order block. Why? Because after a break of structure, the market, people get out of the market, and now we're looking for new sellers to come into the market, because there's a lot of people that took profits here, and then there's a lot of liquidity that came out of the market. Now we have to get more sellers into the market. So that's why you see price create these structures, creating more people to buy into, to sell the market again, and then you'll see a run. So on the lower time frames, this is where I've been looking at, looking on the lower time frame for this level to hold, and then creating going with the momentum, because I like the second run, because of you already know what the trend looks like, where the order flow is like. The first ones, these ones I'm a bit nervous about until I see this one, and then I'll frame my trades in these areas. Why? Because if you see on the weekly, we are still in the premium zone, so we're selling at this point until we get down to start breaking levels, and then we start breaking down the lows on the weekly. But obviously this is the run that you can take. You're only looking for sells on a run like this, just looking for sells, waiting for price to pause, get more people in the market, and selling at this point, right? You're only looking for sells, and then price creates a consolidation, and then we see a structure shift. So that's basically how I look at market structure and determine my trades. So let me show you just one more pair before anything, and show you how I look at it even on the lower time frames, right? And okay, I'm gonna weekly, obviously I determine my structure on the weekly, obviously get my high and get my low. I would say this is my high over here, right? Because this is the high that broke structure, right? This low failed to break structure. It's still a low, but it failed to break the high, so it's a weak low, right? So it's my internal, external, my weekly screen. Turn this into green, and now I have my weekly high and low, and then this is my internal structure. So in here you look for market structure shift based on this momentum, because it's a strong high. That means we are bearish, right? And this low failed to take out this high, so the price is still bearish. So on the lower time frame, you look for structures like this. Let's say I will put this as a structure break in the lower time frame, right? And you can say this is a new internal high, right? Because it's the high that took out the structure. I think it's a new internal high, and this is the last low pre-break, So you expect this low to hold price, the price to reject here and continue down, right? So that's where our frame trades. That's how I frame my trades. And I go on a daily. On a daily, you see this the similar levels, external, internal structure. Start breaking the lows on the internal structure, and you start looking left as well, because these are important areas. This is the last high pre-break. It's quite important. You can see that if I put in a line here, right, you can see how price respects these areas, right? So we have our frame on the weekly. The price is bearish. We are coming into the discounted area of this zone over here, and you can start looking for, obviously, as long as price keeps breaking structure, you start trading this market based on the high time frame bias and order flow, right? So for me, I will look at things like this. Obviously, this is my daily internal structure, internal zone. Obviously, we are in the premium, so at this point of the market, I'm looking for sells, because we can see, obviously, even though we broke structure here, let me show you quickly what I'm talking about. This is the last low pre-break. It's quite an important level, so if we draw it there, as soon as we break this level, retest it here, and that means the price is continuing with the high time frame, with the weekly order flow, right? So we created a high. That's a break of structure. This is the last high pre-break. It's quite an important level. See, reject, 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 and we finally break it. So you wait for any price that rejects that, retest this area, and you can frame your trades based on that. So now we have our 4-hour internal. Here's our 4-hour internal. We can call it a daily or the 4-hour. I prefer the 4-hour. So before this move happened, there was a structure break here, right? And price created this original consolidation. What I do is, these levels are quite important to me. So I will wait, because the weekly showed me that it's bearish, because this is a strong high, hasn't been taken out yet. This is a weak low on the weekly. So if I look at the 4-hour internal before this run over here, we broke structure, right? Retested this area, but we failed to move up high, because a lot of people came out of the market at this area. We created this original consolidation. As soon as we break below this high here, that means that the lower time frames will show you where, basically, we'll start the high time frame move. You'll start seeing structure breaks on lower time frames, and then it'll show you the moves. It'll show you that the market is ready to go another direction. So you'll see these structure breaks, these level breaks. See, we broke structure here. So structure break, came back. Obviously, I spoke about this gap between these two lows, and see, came back into this low, retested this area here, and you can start framing your trades around these zones, around these rejections over here, right? And you can just take the ride, keep selling, 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 until this level is broken or retested, or the weekly structure is broken or retested. So you can just keep looking for sells, because we are still in the weekly zone, and this is still the internal structure, right? But obviously, within the internal structure, the lower time frames will frame your trades for you. Will basically start change. We'll see market structure shift in lower time frames. But obviously, the most of the work. That's why I'm not even going into the 1 hour, the 15 minutes, because most of the work is done on the higher time frames. If you do your higher time frame work and you determine your very areas on the higher time frames, that's most of the battle won. So as soon as we retest here, start looking for sells, start bombing sells, you can see that we start breaking structure. What happens after a break of structure? Market will get a retest. At this point, momentum was too big. And what happened? Price ran, created a consolidation there. It didn't come back immediately. That's why it moved back so far into this consolidation zone, into the zone here. This is a zone. This is a value area. That's what I'm talking about. This is where you frame your trades on the lower time frames. So if you look at this, right? If you look at this move over here, you know this is a value area, right? I can draw a line over this high here. This is the small high, the broke structure. Let me just make it yellow. So I'm gonna go on the lower time frame to show you what I'm talking about. If I draw a high here, right? This is the high, the broke structure, right? But it's still a value area, right? On the lower time frame, in this box over here, I'll go on the 1 hour now and show you what I'm talking about. When you know that price is at this level, that's where you frame your trade, right? That's when you look for entries. You don't do your analysis on the 1 hour. You stop on the 4 hour. You know this is a zone on the 4 hour. So what do you look for? You look for rejections and you look for your entry model because of, you know, the high time frame bias. The 4 hour bias is also showing you, right? This is a pullback. He hasn't broken any significant structure to call this a market structure shift, and you frame your trades around this area and continue selling until a major level has been broken. So you can frame your trades around here. Can go back to the 4 hour and show you another zone where you see a market structure shift and you see price come back to the area, exactly like here. I showed you this, right? We had a run, another area here for you to take your entries, but we didn't break structure. If you wait for structure break and a retest, see price came back, retested this level again. These are the levels I'm talking about. These levels here, these structure breaks. These are the levels I'm talking about. But if you know this strategy, you know there's a trade here as well. This is the low. It didn't break a significant structure, but there's a trade here. You know where the market, where the bias is, right? But for me, these levels, and you can see, we keep creating. I keep talking about these gaps. There's low and there's low. There's always a gap, and the price comes into that gap. You can frame your trades around here on the lower time frames. You know, it's all about following market structure. You just follow the structure. If you keep breaking structure, wait for price to come back to the value area, or depending what you trade, how you trade, you can basically enter at the break or whatever you do, but follow market structure, follow the higher time frame, what the higher time frame is telling you. Just follow that. Just keep selling. If it's saying sell, look for sells. Wait for structure breaks and formulate your value areas on the higher time frame, and then you just execute on lower time frames. That's it. Just follow structure. I can show you many examples. I don't want to make this video to be long. It's already too long. But there's many examples like this. But if you watch this and you see what I'm talking about, and if you go on a chart and start plugging in these things, and you start looking at market structure breaks, there's a break, there's a retest all the time. Break, retest. Usually retest the last whole pre-break. If it didn't move too far from the value area, it'll retest the value area, the order blocks. So just go do your homework. Go have a look at clean charts, bear charts, and just do this exercise. The way I'm telling you, it's gonna help you. But obviously, go do your own homework. Don't take my word for it. But for me, market structure. If you're new to trading, focus all your studies. Don't follow what everyone on social media is saying. Just focus most of the bulk of the work on market structure. You can watch my videos. You can watch anyone else's video. The people that are true in price action there's a lot of things that the market structure is an advocate of a lot of good traders. Everyone who's a good trader, who's a professional trader, will tell you the market structure is very important. If you can read market structure, if you can see the footprints of the big players in the market, if you follow their footprints, you can see them. They can't hide them. They can't hide them. They're big candles in the market. They'll show you their intent with those candles. If you see those engulfing candles, it's intent from the bigger players on what they're trying to do. If you can spot those little nooks and crannies and little signs of the big players in the market, you can't go wrong. But obviously this is trading. Do your own homework. But this video is very long. Hopefully you stayed with me for this long, and I appreciate you guys. Thank you for joining me, and I'll see you in the next one. Smash up the like buttons, share it with your friends, whatever you want to do. For me, I'm not an educator, I'm not a professional trader. I'm just sharing everything I've learned for over the years. I've been trading for 5 years, and I've been trading full time for over 2 years. So I've learned a few things. So take my word for it, don't take my word for it. For me, I'm just trying to give you some knowledge to take forth. So thank you for joining me, and hopefully to see you on the next video.